Super excited to have all you guys on. I'm also really excited to be joined by Matt, Tracy, and Eric from three of my favorite portfolio companies. Not to pick favorites, but when Christina first reached out and said that this group was coming together, I was looking forward to the conversation for two reasons. I think one is I think revenue ops and cash operations is an issue that's oftentimes overlooked. I saw, from the chat that I see keep popping up, there's a lot of folks who are CFOs, VPs of finance. And I think a lot of the expectation is usually it just works, right? The company's focused on building product, selling it, and then, getting revenue in the door and collecting cash and following up and making sure that the billing is right and invoices go out and retention works, just kind of happens, right? But I think what you'll hear about today is there's actually a lot of optimization that can happen. And there's a lot of places along that kind of revenue and cash operations funnel where these three folks can, one, give advice, and two, talk about their platforms and how they really help around scaling your business, making sure it's compliant, making sure you're generating as much revenue as possible and collecting it as much as possible. I think the second reason why I was really excited for this group to do this today is there's actually been a pretty amazing level of collaboration between the three teams here. I was talking to them just the other day, and they actually said, hey, there's actually a Slack channel that they have where when a customer is having an issue that touches multiple of their solutions, like they're actually collaborating on how to solve that customer's need and not just kind of handing it off. And so I also think that bringing together portfolio companies is something that we love to do, and for it to have happened organically and to actually begin to integrate the solutions and even integrate the journeys is pretty amazing. So with that, I will let each of the panelists introduce themselves. I'll be asking a couple of questions throughout, but it's really their time. So why don't I start with Matt and TaxJar.
Thanks, Byron, for the introduction. So TaxJar is a company that's 7 years old, and we've taken on the mission of automating indirect tax and sales tax compliance for our customers. So we do a lot of work with high growth mid-market companies, automating everything from the calculation process to the reporting process, as well as filing as well. So providing an end-to-end solution. So they don't have to focus on the pass-through activity of sales tax. They can focus on growth. And the states here in the US have done a pretty good job of making things pretty complex. They all operate with different rules and regulations, and it changes all the time. So our customers look to us to not only provide a full solution, but also a solution that's always up to date, and giving them line of sight or visibility into all of these changes as they occur.
Amazing. And I still remember when we did the deal with you guys. I think it was late 2018. It was just off the back of the whole Wayfair decision, right? Where it basically went, and there are a whole bunch of companies that now said, oh, wow, I used to just think about tax where my headquarters was. Now I got to think about it across the whole US. And, as we do in kind of every deal that we do, we talk to a ton of customers. And I think time and time again, just the simplicity of getting you guys implemented, and actually, we heard a lot of it just works, right? To your point around the complexity that goes state by state, it's something that you can either hire a team for, or you can get a really good software solution for. And a lot of the customers really loved building that, and we're excited that you guys continue to grow, continue to kind of expand into new segments and geos. And so thanks for joining today. why don't I kick it over to Tracy?
Great, thanks, Byron. Hi, everyone. I'm Tracy Mang. I'm the VP of Partnerships for Checkout.com. We are an international payment solution provider, and one of the key differentiators about Checkout.com, especially for me coming in, I've worked in payments all over. Was at Google working on Google Pay when it launched, and I just remember, speaking of complexity, seeing how when a business wanted to implement something like Google Pay, having to implement it on multiple platforms, the provider not being able to kind of keep up with innovation. And so I think what's really special about Checkout is we are a single platform encompassing acquiring, gateway, and processing. We're also a very modular platform built for merchants that are scaling, like the folks in the audience today. And, we allow for merchants to have better acceptance globally, which, again, as you grow, and especially as you grow internationally, there's a lot of complexity that occurs in region. Can speak a little bit more to this as we proceed with the panel, but those are some of the key differentiators and reasons why I think Checkout is really unique in the payment space and is really making a lot of headway. It's also why we have customers like TransferWise, Revolut, some of the more sophisticated players choose us as they grow their companies. So yeah, with that, turn it back to Brian.
Yeah, no, Checkout is near and dear to my heart. This is actually one that I worked on personally. And I think the thing that got Insight excited and you got all the partners here excited. I think first and foremost, you guys are very tech forward, right? Like when I look at when I look at just the number of head count in R&D, right? It's pretty amazing to see how much technology is being built. So, I think this year you guys will be close to 400, 500 people in R&D, just developing platform that works globally. Across, has multiple features and is making sure that people are not missing a transaction when they don't need to. It always works. I think similar to TaxJar, and you also probably say the same thing about ChargeBee. I think time and time again when we talk to customers, it was really about this thing is easy to get up and running. It's powerful. And I think the vision as I look at Checkout of kind of being the fintech of fintechs and having kind of this connected finance. I think there's a reason why a lot of these big names on the bottom that's listed around Klarna, Revolut, TransferWise are powering their fintech platforms with your fintech platform. So yeah, super exciting. Eric, do you want to wrap up intros and then we'll go into the panel?
Great, thanks, Byron. So my name is Eric Chan, head of partnerships at ChargeBee. We're focused on providing subscription management and revenue operations for companies who are looking at subscription. And if you look at subscription, right, it actually has many forms. Some of you might be familiar with your utility bill. You maybe also have a membership to a gym, or maybe you're taking some kind of prescription medication. All of these and many other different types of services that are you're using either in your work or your personal life are considered subscriptions. At last count, our product team said that we support 480 different types of subscription business models. So that, is very, fantastic to see that pretty much anything can be turned into a subscription. It's really how you want to structure and build out a recurring business model. And so very excited to be working with Insight, obviously, as well as our two partners at Checkout and TaxJar.
Cool. And yeah, I'll wrap my quick perspective on ChargeBee. As you noted, everything is becoming a subscription, from your groceries to your iPhone when you buy it now, right? I just upgraded, tried to buy it outright, did not work. I think the power of the recurring model is really shown through, and I think what was great and as we kind of looked at ChargeBee is you guys took this really powerful tech, made it really easy to integrate. I think if you talk to any developer who's trying to put it into their system and integrate it with all the other parts of their finance stack, like very easy to do. And that was new, right? Historically, it had been, the ERPs and Zoras of the world trying to just add it on as a module, and you guys focused on it, did it better than anybody, and brought it to, honestly, for this audience, and I think you could say the same for all the other panelists, like for ScaleUps, I think the product just works. It is easy out of the gate, and it's powerful still. And so as I was like writing these in preparation, I realized I was like, oh, there's a lot of common themes in this panel. And so I'm glad you guys all came together. Why don't I'll start with a question, and I'll go in reverse order, Eric. So you can start. Maybe let's just talk a little bit and just set the stage for the audience around how do you think about, call it, revenue operations workflow? Like, what are the key components? And then like, how does ChargeBee fit in? And then I'll ask the same thing to Matt and Tracy as well.
Yeah, so for us, we look at revenue operations as going from lead to ledger. So it comes in through your CRM. They get signed on as a customer. You provision or procure them into the billing system. And then once that happens, we'll leverage TaxJar as needed and checkout for processing the recurring payments. And then once that happens for the first time, right, and you're going to either have it as an ongoing evergreen subscription, similar to like Netflix, or you may have a fixed term 12 or 24-month contract. There's a lot of sort of intricacies of making sure that you're collecting the payment on time, but also doing all the analysis around that. And what it does is it changes the viewpoint of passing the order or passing the customer from one department to another, and really rethinking about it, because every month or every frequency where you're asking for the customer to pay you is an opportunity where sales, marketing, finance, success, and support have to come together and make sure they're earning the revenue that the customer is paying you.
Makes sense. Matt, how do you, where do you guys kind of fit into the funnel and all the parts that you touch?
Yeah, I think about it in a couple of ways. One is we're going to always understand, does the customer provide quoting? Some companies do. And if they do provide quoting, what's important there is, are they exposing the tax as part of the quote? Because there's the concept of true cost that customers want to understand. If there's an additional 7, 8, 9% on my fee, I want to know that up front. So there is that initial component. If you do quoting, that's important. But what really, when you think about quote to cash or order to cash, we play with the initial order. So within the ChargeBee workflow, capturing that initial order, applying the accurate tax calculation prior to authorization of the payment before checkout.com does their magic, right? So essentially, we're in that magic moment, right, prior to committing the order and the authorization of payment. And then on the other component is on the recurring side. So once all those customers are now in recurring mode, your bill runs, whether they're weekly, monthly, or so on, it's going to be typically higher volume. And so the ability to calculate across batches of orders, again, before payments are processed. One interesting point to that is companies are sometimes using different front-end systems to try to get the initial order. And then maybe they've got a different calculation tool for sales tax on front end versus back end. It's really important that it's consistent for the customer for that initial calculation and that second bill, right? That subscription bill, because if you get variance, if I got charged 7% here and 8.5% here, that's going to create customer service issues. So that working with ChargeBee to provide that consistency to customers, and then with checkout.com providing doing their magic on the authorization side, it's providing customers a real consistent approach to capturing funds.
Makes sense. Tracy?
Yeah, and I think about the revenue ops value chain and where I think checkout really sits in and helps facilitate automation is, I would put it into maybe 3 buckets. The first is pre-transaction, the first is post-transaction, the second is post-transaction, and then finally, the data analysis that kind of brings it all together. In terms of pre-transaction, we're all customers, we've all purchased things online, and I think the B2C use case is pretty straightforward. But when you get into the B2B world, I see a lot of folks in the audience who are probably from, SaaS companies, and you're dealing with invoicing, and you need to send a payment link to your customer. That's when it becomes a little bit more complex. So Checkout also plays in that space. We're not just the point of transaction, but we actually go upstream to help SaaS and B2B businesses really thrive. Post-transaction, there's kind of the recurring element of things, which Eric and Matt both touched on, and I think that's really important, especially in SaaS models, where that first transaction is really important. If it doesn't go through, you might be missing out on the lifetime value of your customer. But even in the subsequent transactions, those also need to go through smoothly. And that's not always straightforward, especially when you have regulations in Europe like SCA and 3DS2 that might block those recurring transactions. You really want to make sure every transaction is going through so that you're capturing all of the revenue from that. So I think post-transaction, that piece is important. We also manage, of course, refunds, chargebacks, all of the tricky edge cases that happen when you have, any sort of revenue operations. And then finally, I think data is really important. So, I see a lot of CFOs, VP of Finance, or CFOs, VP of Finance folks in the audience. And, as you're thinking about how you take a look at, your data, what revenue is coming through, what you're being charged on a per transaction basis for various, various tools, how can you really optimize that at scale? And I think that's an important piece of the puzzle as well.
That makes a lot of sense. That actually brings up a really good point of, I'm assuming each of your customers is not coming always for the exact same problem, right? That there are multiple problems they're trying to fix along the chain. I guess for you, like, is there a most common problem? Like when should a company, like when do you most often see a company reach out and say, hey, I really need to implement Checkout, or I really need to implement TaxJar or ChargeBee?
I'm happy to jump in there. I think for us, our bread and butter is really with merchants who are starting to grow and grow quickly. You're looking to just get out the door. I think there's probably other providers out there who can get you up and running really quickly. You'll probably pay higher fees. You'll probably need to take the whole bundle as opposed to picking and choosing what you want. Where we really, what our sweet spot is as customers grow, as their volume grows, as their complexity grows, as the number of regions they have to deal with expands internationally, that's where we see customers coming to us. And, that's why I think, our list of customers also includes a lot of, fintechs and folks who need not just kind of that straightforward pay-in support, but they need various directions of money movement, whether it's pay-ins and payouts in the case of, let's say a TransferWise, where they want, a provider that can allow customers to both deposit and withdraw funds. We facilitate all of that money movement. And I think as complexity grows, we grow with our customers. So we, even just like in the way that we price and the way that we support a modular approach. If a customer wants one aspect of our fraud tools and they don't want to use another kind of add-on feature, that's okay. We let people have that flexibility because we understand that as you grow, each customer is going to have their own needs. So I think for us, it's really when the organization is becoming a little more complex, the financial systems, need more data, more rich sort of analysis tools. As well as just simply growing in volume are really the key factors for when merchants start and customers start reaching out to us.
Yeah, it's similar to what Tracy said. It's the same thing on tax compliance. I think if you rewind pre-June of 2018, the trigger for the requirement to collect and remit sales tax was tied to the concept of physical nexus, right? So where do I have an office employee inventory Where am I providing training in a state? But as a result of the Wayfair decision, it gave states the ability to bind, Wayfair versus South Dakota, it gave them the ability to bind companies to collect based on how much they sell. And this could be either tied to order volume or revenue, right? Or both. And so what's interesting is we did some analysis recently using US Census data based on % of retail sales by state. And when you start to do upwards of 1,000 orders a month or 12,000 a year, or up to 5 million in revenue a year, you're now required to collect in probably 12, 15 states just based on that level alone. So when you think about that now, the whole concept of the complexity of enterprise level, enterprise companies that used to have to collect in 20, 30 plus states, all that complexity has been brought downstream to companies that are at early growth stages. And I think that it grows exponentially. And I think that's when, multi-state is when when you have a multi-state requirement, that's when TaxJar becomes a hard requirement for our customers.
Which I'm assuming is almost every company. It's yeah.
Pretty much now it is, yeah. So
yeah. So for ChargeBee, it's interesting. Depending on the stage of the company, we're sort of competing with different constituents. In the early stage company, we're probably competing against spreadsheets or some kind of template that you're just sending out an invoice. The other one we could be competing with in the early stage through the scale-up phase is something that's homegrown. So, I often joke with a lot of people that, an engineer or two, Google, GitHub, and maybe some Red Bull, and in a long weekend, you can probably build your fundamental rudimentary billing system that can help support your company, right? The issue becomes when you start adding marketing people, maybe it's a sales assisted subscription that you're selling, or you want to make some changes to your platform. Those engineers that built the rudimentary system, now you have to basically keep them and sustain that platform and be able to handle scale or be able to handle all of this functionality that may or may not have been thought through when they just spent that long weekend building something, right? And so then what happens is we often hear where customers have a homegrown system, they're having to issue credits to their customers because of incorrect billing, or they'll have high churn to what Matt was talking about earlier, because there isn't that consistent experience with delivering a monthly subscription bill to them with accurate numbers. And then in the scale-up phase, we do often run against companies who've decided to choose maybe a very small sort of SMB only focused billing solution, but it can't quite scale for the complexity of maybe multiple regions, easy integration with a TaxJar, or maybe other pieces of software like accounting or their CRM. And so they'll look at us because, oh, you have all these integrations out of the box. They're fairly easy to configure. You can get up and running quickly. And you guys have a lot of success with scaling customers from zero to hundreds of millions of dollars a year.
That just brings up a good point, and also thanks, Ashish. I just saw your question in the chat. Actually leads right into the next topic. Let's talk a little bit about integrations, right? And just how you guys think about integrating with the existing set of tools. So whether that's an ERP or CRM, and then maybe the second part of the question, we can talk about how do you guys integrate with one another, and what does that look like, and potentially how does 1 + 1 equal more than 2? I don't know, maybe Matt, do you want to start?
Sure. So when we work with companies, we want to understand, again, your order to cash process. How are you handling all of your channels of orders? You may have a recurring model, you may have your own website, and so on. So you may take phone orders. We want to understand that whole process and how those orders flow through. And I'm talking about the life cycle of the order. not just the initial order, but then how is it processed? How do you handle returns, credits, voids, partial returns? Because all of that has impact on the liability you owe the state. So when I think about from an integration perspective, right, we have a pre-built integration to ChargeBee. And what I've seen in SaaS, going back to 2010, maybe projects were measured in months and weeks. Now customers are measuring projects in days and hours. So time to implement is critical, and time to adopt. And when I say time to adopt, it's not just the implementation, it's the ability to use the service. So having like a real intuitive UI, it shouldn't take a long time to get trained and understand how to leverage the service and benefit from it. So all of these things have impact. But I think the biggest thing when we work with customers that are using ChargeBee, we want to understand the role that plays in supporting their recurring payments. And then we also want to understand other systems they use, because they may be passing their ChargeBee transactions through to NetSuite, and NetSuite is playing a role there as well. So there's different avenues to get all of that data right to TaxJar. The key thing for us, though, is making sure that whatever process it is, it's optimized, in terms of, supporting what they need and getting data to our service. And the second thing is that it's done, again, measured in days and hours, not weeks and months, right? So it's really important that customers are able to get an ROI immediately on our service today.
Yeah, Byron, I have this picture in my head. So there's a restaurant near my house for a long time, and on the front of it, it just said, "We serve donuts and Chinese food," right? And so, I think that there's a tendency for a lot of technology companies to say, "Okay, we have our product A, and how do we now become good at product B, and maybe somehow create a product suite and tie them together?" But I think with SaaS, especially at the pace of feature development and the evolutions of the company, what I'm noticing is that instead of trying to do everything well, we're going to be really good at one thing. And so for us, it's subscription management, billing, invoicing, right? We're going to try to find the best-in-class partner, like a TaxJar, like a Checkout, to do some of those other things well. And our job is to make sure that, again, to Matt's point, time to value is, as short as possible, right? It's, hey, if you already have an account with both, just log in, put in a few credentials, and you should spend, most of your time configuring it, set it, and forget it, and just let the thing run. Where we do a disservice is if we don't have a great integration, or it could be much more mature in making it easier and easier for our customers not only to connect it, but also be able to expand as far as they can, as far as they can go, whether it be geographical or segments or verticals that they want to go and target.
I guess just to quantify it a bit, you talked about you have a code. Obviously, the three of you guys have kind of pre-existing integrations. I'm assuming if somebody had a stack that doesn't have, one of you, you'd be able to integrate. But what are we talking about in terms of that, time difference between something that's kind of pre-existing versus something that you potentially have to build, right? I know that as you said, it's days and hours now in terms of time to value. Like how quick are we talking here?
So I'll make the assumption that you've already set up an account with ChargeBee, Checkout, and TaxJar. It's really putting in your login credentials, configuring how you want to set things up, and probably a really long day, if not 2 days, you could be fully connected and off you go, starting to process for customers.
Awesome.
Yeah, and I'll second that, because I think what's interesting, for example, about the ChargeBee Checkout integration is it's completely turnkey. So, with a ChargeBee integration, you don't have to do a separate checkout integration. It comes preloaded into the stack that you have with ChargeBee, which diminishes a lot of integration hours that you would need to put into integrating with Checkout. We do take a lot of pride at Checkout in being pretty fast to market when it comes to, just the simplicity of the API and the ease of implementing. Curve, for example, is a fintech in the UK that implemented us over the weekend. But that being said, I think, to Eric's point, there's a lot of value in being able to just kind of, log in with your credentials and for it to work. The other thing that I would mention is that I think a lot of, we talk to a lot of customers and partners, and, there's kind of this a balance that you have to strike, where when you're talking to multiple platforms and multiple providers, obviously then you have multiple points of contact, support lines, et cetera. And that might add complexity to your organization. What I think is great about this group, and especially just being in the Insight portfolio, is one, we're all very customer centric. I think if we weren't, I don't think the Insight team would have invested in us. And so I think there's kind of this benefit, and just even the cultural, sort of shared cultural norms that we have around how we go to market and how we service our customers after they come on board. From a customer success perspective, and this is what we were talking about with Byron offline, ChargeBee and Checkout, for example, have a shared Slack channel where we, if we have any customer issues that come up, we'll actually work it out between us. So there's no diffusion of responsibility. It's not, finger pointing in opposite directions, which ultimately leads to headaches for the customer. So there's a lot of very close collaboration between our teams, which I think is absolutely necessary when you're talking about, using best in breed products, because that could be the shortfall in considering that versus a bundled approach.
Totally. And kind of digging a little bit more on this integration point, and if we talk, specifically about, CRM, just because there was a question on it. Like, I guess, how do you guys think about that integration? Because obviously, you're the sales team that's kind of getting everybody to this point of actually buying is usually working out of either a Salesforce or another platform. Like, how does that integration work? How do you guys think about the data flow between your platforms and then to like either a CRM or ERP? Just as you kind of talk to the CFOs or VP finances on the phone, like how should they be thinking about that?
I guess I'll start. So we have the ability to support both a self-service model and a sales-assisted model, and I think you're probably referring to the latter, where you need to have a quote and then that turns into a contract. So from that, Salesforce, we have a pretty good integration that can handle that. Any sort of customization, we have a very full set of APIs that can then be customized. So if it's a custom object or how the quote needs to be structured, we would just integrate with a custom kind of setup for Salesforce. And then all of that stuff then coordinates with what Matt was saying on the tax side. So, once we know the address, whether it be billing or shipping, then we can work with TaxJar to do the auto calculation. And then all of that stuff can flow into a NetSuite or a Sage Intacct, a QuickBooks, a Xero. So we're very flexible on the accounting and ERP side. And then from a payment perspective, an interesting thing that we can do is not only can we have a primary payment method, but we could also have a backup. So let's say you're a B2B business and it's connected to Checkout. We could, let's say, have a bank debit product that could be the primary, because maybe it's a high dollar volume, so you're trying to save on the fees. And then in case there's something wrong with the account, the transaction didn't go through, a credit card could be a backup, right? And so leading you through all the way to making sure that you're not only thinking about how to convert the customer, but you're also thinking about how to do revenue collection.
Makes sense. Why don't we switch gears a little bit, and I'll ask I'll do a couple more pointed questions. We got a question in the Q&A around tax for you, Matt. Like, The question was, and thank you, Alex, do you offer ability to register in new states, territories within your platform?
Yeah, we have a service that will handle the state registrations. I think more than that, though, we give you a view of your economic nexus exposure right in our platform. So it will track your exposure by state across all the specifications that each state has. There's alerts built in as well as you cross certain thresholds in various states. And then once you do, we have a service where we can support registrations for you as one-offs or more of a big bang approach, where we'll get you registered, with a seller's permit in the required states. We also have a partner network of tax service partners that we lean on as well. And what we find when we use them, it's really great. Maybe if you have to do a voluntary disclosure, maybe you have some, we like to call them sins of the past you have to address, or issues of the past. And as part of that process, then they also take on the registration work. So it's under one umbrella, but based on your requirements, we've got multiple options for you.
And maybe, generalizing that question, right? If, as you kind of scale from 5 to 10 to 50 million, obviously you're going to expand geos, you're going to expand, both within the US and externally. Like, what are some of the implications of kind of tax nexus and just if you were advising a business that's going through that transition, just around tax, and obviously a lot of it will be within TaxJar, but just more generally, how would you think about it?
Yeah, absolutely. So, when I think about as I grow, I want to be ahead of the curve, based on whatever country I'm working in, and specific to the U.S., right? I want to know, what physical triggers I've set, what economic triggers, and I'm tracking that on an ongoing perspective. Specific to international, there are different rules tied to dollar thresholds by country, also based on the types of products you sell, whether it's digital or physical, where you inventory the product. So there's also ramifications. And I think the reality of the world we live in today is not only in the US for international companies coming over here, but also companies in the US is global. They're getting rid of borders. Both in the digital world, that's already happened. So in the SaaS digital world, the EU now has the mini one-stop shop, which provides an easy way for companies to register and collect in the entire EU. This is a trend we're seeing all across the world, both in terms of making it easier for companies to comply and pay VAT or sales tax or whatever tax type they have. And then also the frequency in terms of that when they want the money. So now it's, we're getting more, for example, in the US, we're getting prepaid scenarios with more. It used to be just California, then other states have rolled it out where they want you to prepay, percentages of liability and true up after, the end of a filing period. But that's happening as well. And so I think when you think about velocity of compliance, there's risk tied to that as well. So you have to do it on time in the right format. If you don't, there's penalties associated with that. So you've got this, again, growing list of, both in the US and global, right? All of these additional requirements. And then you have the velocity of collection of payments. So really the need for technology just continues to grow in our space.
Awesome. Hey, Tracy, similar question to you, obviously more on the, kind of what I call high performance PSP side. Like, as you think about companies kind of expanding, like what are some of the places where, really potentially changing out your PSP can help, right? As you think about receivables, as you think about, fraud and acceptance rates, like all of those pieces, like where, I'm assuming somebody says, I'm early stage, I got something set up, like, isn't that just going to scale with me? Like, where does that kind of fall down, and how do you think about the value prop of checkout as they scale?
Yeah, there's a few pieces there. So one, if you are a business that has a recurring model, you're collecting, SaaS revenue, and you need to make sure that every transaction is going through. It's really important to pick a provider that has account updating services. So this is basically, the ability to go to the networks, update credit card information if it's lost or stolen. I mean, I think a lot of us will probably just put our Netflix subscription in the back of our minds, and it just kind of goes on. Or, you know, if it's LinkedIn, even from a B2C or a B2B standpoint, you kind of just set it and forget it. And as a customer, that's a good experience. When your credit card expires and you have to then input another one, that creates friction. And whether your customer is another business or a direct consumer, that will oftentimes lead you to lose out on not just that revenue for that one time, but potentially a lifetime of revenue. So I think that's really critical. And you know, it's one of the reasons why we've invested a lot in our account updating services across the different regions. The second thing I'll touch on is international. So as you're growing internationally, in the payments world, there's a lot of complexity that comes with every region you launch. So for example, the acquiring bank that your provider works with is really crucial, because if, for example, you're trying to launch in Europe and your provider has an acquiring license in one region, but not the other, especially now with Brexit, that could actually lead to miscommunication between the payer and the bank that's processing and that's approving the payment. So what can end up happening is you end up getting these false declines where you have, you know, a legitimate customer, they're paying with, you know, maybe their Barclays card, but for some reason the bank that's based in France is not recognizing it, and they're marking that as declined, and you're not getting the revenue for it. So those are the types of scenarios that are really important to figure out, as well as the local payment methods. So when you go into countries in Europe and the Middle East and Asia, you know, there's local payment methods there. You know, the Alipay's of the world, GiroPay, all of these different local payment methods are that region's primary payment method. Like we in the US think of it as an alternative payment method, but it's actually the primary payment method. So are you creating as much acceptance opportunity as much as possible for your customer base, or are you limiting them to just the payment methods that are supported? I think those are all really important things to consider as you grow.
Makes sense. You know, one question, you know, that I actually got, I solicited questions from folks ahead of time as well. You know, there's as you scale, oftentimes there's this want to potentially play with pricing and packaging, right? As you think about how do I enhance my revenue coming in, like how do each of your solutions help in that process? And you know, as you're kind of potentially changing pieces of your business model, like how does what I call like kind of test and learn work with each of your solutions, and just help folks understand that better? Maybe Eric, you want to start?
Yeah. So for pricing and packaging, what's interesting is that let's say you're not using ChargeBee, you're using, let's say, a homegrown system or something like that. You're going to be dependent on your developer, right? Your engineer, to say, hey, I'd like to just even make a 10% increase or decrease to my price. How long is that going to take? You know, and depending on how busy they are or how difficult it is to just do that simple change, it could take you a week, right, or longer. And so giving that user experience so that a product manager or someone in the finance team can just go in and make that change and actually see the results is, you know, happening in real time, it is important. I think the other piece of that is when you're trying to compare, let's say, the same product and you have it at different prices, you need to be able to collect the data to see what the attach rate is, or did that affect churn? Did that impact LTV? Did that affect your, you know, your customer acquisition number as well? And so being able to not only make it easy to change, but also seeing the impact with data is kind of two big components, right? And then after that, it's also about thinking beyond. So an example of that is, let's say you have a 1.0 feature for what you're offering as your USP, and you're unsure about what to do for the 2.0 feature. You know, do you Do you just increase the price because it's, better, faster, cheaper, or do you do some experimentation? And that's where you can play with things like add-on pricing and actually look at the attach rate between how much people are paying for your core package and that 2.0 feature that you're adding as an add-on. And once you see the high correlation, then you can look at maybe bundled pricing, but you can move hopefully the pricing up by, let's say, 10 or 20% because you've seen that high attach rate. So those are two ways of thinking about how you can think about different ways of packaging and pricing.
Makes sense. Matt, Tracy, any thoughts on that one?
Yeah, I mean, I would touch on the packaging piece because I think that has the sales tax implication. So we see a lot of companies in recurring, they'll package tangible personal property, TPP, with services that may be exempt, but when you bundle them together, there's implications on sales tax and how the state views the taxability of that. In addition to that, we have a lot of companies that are bundling, like food boxes, for example. So they'll bundle food and candy based on certain percentages. And states have actually now have tax codes based on percentage of candy and food. The higher the percentage of the candy, the more they're going to tax it because they want to promote healthy eating. So there's things like that happen. But when you think about any bundling you do, you have to think about one, the implications from a tax perspective. Now, if you want to break out the bill of material and as a line item level, when you calculate the tax, that's an option. Or do you want to look at it as a fully bundled product and then make a decision on terms of how that is taxed as one item or one SKU? So this is really important when you think about your position on your product or service offering with any state and how you define it.
I guess, like, as somebody's thinking through that, is that something that they can kind of scenario test in TaxJar, or what's the best way to kind of utilize your guys' platform to help with that?
Yeah, I would say, I wouldn't necessarily say scenario test, but I would say that lean on us to, we have lots of content that covers taxability requirements, and we have a lot of tax codes that we can expose to you in terms of, what the implications are on how things are taxed in various states. And so I think, we definitely want to provide you some transparency around what is based on this business model, how does that change things? And we also, again, back to our tax partners, we do have partners that provide guidance as well. So the goal is really to, again, how do you define it? And then ultimately, that's really important. And then, how you package it though has implications, and we'll do our best to give you, our feedback based on that. One thing though, the one recommendation, the conservative approach is always the preferred approach. It's a good way to go.
That makes sense. Tracy, any thoughts?
Yeah, I wanted to touch on, as you're experimenting with different packages, the impact of average order value on, your costs per transaction at the end of the day. So, for example, if you're using a payment provider that has a bundled pricing 2.95% plus 30 cents, that 30 cents is on a per transaction basis. That 2.95% is based on the value. And so as you think about growing your business, different ways of slicing and dicing the AOV, I think it's important to have a provider that can show you really clearly how does that impact your cost per transaction, your total costs, as well as, if you are growing in one direction or another, there's even nuances that you can get into as it relates to interchange. So are your customers paying through ACH? Are they paying with Visa, MasterCard versus, Amex? All of those types of cards, whether it's credit or debit, come with different types of fees, and those fees can add up. So, when you have a blended rate and, you're playing around with this, there's not a lot of flexibility when you have a provider that uses kind of the interchange plus model, which is what Checkout uses, you have a lot more flexibility in optimizing your transaction costs and understanding, okay, if I move my AOV up or down, what is the impact on the end profit that I'm taking home with me? So I think that's important. The other thing that I'll just mention is that I think in general, A/B testing is one of our favorite things. And I'm really glad you brought up this point in general, that as all of us as growing companies, we have to continue A/B testing. We have to continue testing and iterating, you know, and I think one of the things that, as you're thinking about a payment provider, what's really great about the industry today is that, you know, there are lots of different payment providers that you can try out, but not all of them are going to be flexible in letting you kind of try out different ones side by side in terms of seeing which one does better in one region, which one does better with one sort of pricing model. So those are all things to keep in mind as well. For Checkout, you know, we really strive to be, you know, a flexible model that can be A/B tested against other providers. And so, you know, we'll have customers come to us. They're currently using a legacy provider. They start testing us side by side, and, you know, Cheers, for example, is an example of a customer of ours that saw a 6% increase in their acceptance rates when they started using Checkout. TransferWise saw a 1% increase, which was, you know, over billions of dollars in volume, really adds up. So those are the types of things to kind of keep in mind is, you know, are my providers allowing me to A/B test? Are they giving me the data granularity that I need to make decisions going forward? So yeah, I think in general, that concept is really important as all of our businesses grow.
No, super salient points. Looking at time, we got 5 minutes left. Any, I'm gonna pause and on our list of questions. Any questions from the folks on the phone? Feel free to just put it into the Q&A. I'll give it, call it 20 seconds. I got some wrap up questions if not, but I'll give folks a chance. I need like Jeopardy music for final countdown. All right, not seeing anything come through. Feel free to keep adding, and I'll pause the conversation. I guess, you know, as we kind of wrap in the last 5 minutes or so, you know, as you guys think about you know, your solutions and the ROI provided, I'm sure every, you know, finance person out here is thinking about how do I either get more revenue or get it in the door faster. Like, as you guys think about it, like what any just tips? It doesn't have to necessarily be specifically on your platform or your tool, but as they think about, like, you know, trying to figure out how to get a little bit more revenue in or get that through the door faster, like any tips for them?
One thing I think that sometimes the finance organization gets left out at times with when you're launching new products or making decisions around pricing. It should be much more of a collaborative, you know, team effort, and hopefully, you know, the product manager at your company or somebody on the marketing team kind of loops you in, because when you do make those changes, you want at least to have some notification, if not some hopefully input into why these changes are being made. And, you know, maybe there's some advice on, to your point, Byron, how can maybe we can collect faster if we're making a pricing change or a packaging change? Or how can we ensure and ask the hard question of, well, if we make these changes or when we do, are we getting the best performance from all of the tools that we're using in our tech stack?
Totally.
I think to piggyback, for all the finance stakeholders in the room, you know, you're working with software ERP that can be very complex, tough to navigate, you know, maybe slow to innovate as well. I think I would just say, you know, keep pushing them to innovate, you know, keep pushing them to adopt the latest and greatest, to integrate with the best in breed. You know, it's, you guys have, as the customers, and we as the customers too, you know, we all have, you know, ERPs that we work with, need to really be the voices in the room to drive that change. And as you come across, you know, solutions that will work better for, you know, your company, don't settle for the ERP pushing back and saying, this is all we have. We've seen that come up a lot with some of our customers. And I think, you know, we've had some success stories where the customer really banged on the table and said, you guys need to do this integration, or you need to support this feature for us, or this custom build that we need. And they've been, you know, successful, and as a result have, you know, had been able to optimize their finance operations a lot. So, so yeah, that's kind of something that I've observed in my time.
Love it. Matt, any closing thoughts?
Yeah, I mean, when we cover the concept of, like, we talked about time to adoption, right? And I think about our customers, they're constantly, and we talk about the subscription growth, subscription model, they're coming out with new ideas all the time. And so to have a framework that makes it easy to launch new product types, new services, bundling, things like that. I mean, I think that's important. So that time to market and having a stack, checkout, right, and ChargeBee, TaxJar, it will accelerate that process. I'm putting my sales hat on a little bit here in terms of revenue. We have done some things with our pricing, which really try to drive more annual subscriptions versus monthly. And I think that in itself has been really good, because predictability of cost is something we hear a lot about from our customers. And I'm finding people are more willing to pay up front if you can give them a reason. Of course, maybe there's a slight prepaid price break, but also how you bundle the service to show that predictability of cost that will support what they need today. And then, you know, as they grow 6 months, a year from now, and so on. So I think that's, we've been really successful with that.
Amazing. We are at time. I'm sure there's more I could ask, but this has been awesome. Thank you guys for all the time. Hopefully this was useful to everybody on the phone. If there's any follow-up, feel free to reach out to any of us here on the panel, and have a good Thursday and Friday. Bye all.
Thank you.
Thanks, everyone.
Thanks, everyone.
Bye-bye.